Hello guys and welcome back to the channel. This is the Bullish Investor, and in this video we're going to talk about what Cathie Woods, Kevin O'Leary, Elon Musk and many other investors don't get when they invest into Bitcoin. Okay, hold on. I know that's a big claim. And actually in this video, if you're looking for drama, this is not the video. I'm not gonna diss on these people. They all make very smart investment decisions. But I do want to look at one thing. All of us have been force-fed the datum that Bitcoin protects you against inflation and it protects you against market and Bitcoin protects you against market turndowns. And I'm a new investor on the stock market. A little bit about me. So I am a real estate developer in Sweden. I am part of building hundreds of apartments in southern Sweden, and I have quite a few years of experience on the stock market, and I decided to go really hardcore and take you guys on the journey with me. So if you are interested in this, make sure you hit the subscribe button and let's get on with the video. So first of all, both in my real estate investment and in my stock market career, I have found so much false data that people force feed you, and then it takes actually zero time to debunk this. And sometimes you get very surprising outcomes out of this, and it helps you invest better. So let's investigate if this claim that Bitcoin protects you against market downturns and protects you against inflation, if this is true, and how it happened in the past. So you can see my computer screen. By the way, the results of this are going to be quite surprising, and at the end of the video I would like to offer up an explanation of why I think the results are the way they are and how this can help you in your investment portfolio. So the way we're going to sort this out is we're going to look at the S&P 500. We recently have just had a correction, and we're going to look at past corrections and see how Bitcoin and gold reacted. And again, no opinions, no feelings, just the hard facts. So the latest correction on the S&P 500, as you can see, was about 10 point something percent. We're going to look at what the Bitcoin did at the same time, minus 44%. And we're going to look at a third asset, gold, at the same time, and gold actually went up 2 point something percent during the same period. And one thing that is actually very interesting in this is that if you look at the S&P 500, on the 5th of November was when it started going sideways. I mean, you could argue that it was here, but let's say that the bull market finished here on the 5th of November. And when you look at Bitcoin, actually 5th of November is here. And if you look, Bitcoin started reacting maybe 2 weeks before. So the S&P 500 here, it was still very bullish, but Bitcoin was falling. And then if you look at the bottom, this is the 23rd of January, and let's see. So Bitcoin basically at the same time hit the current bottom. Now we don't know if this is the bottom or this here is just a pullback and then we're going to go into a bear market. There's a lot of fears that might be coming, and yeah, this is the same gold in the same time period. So gold number 1, number 2 S&P 500, and number 3 was Bitcoin. So now let's look at one correction before, and the next big correction is the COVID correction. And here the S&P 500 went 34% down in record time. It started in the if we really zoom in, you see that around the 14th of February it started and finished on the 23rd of March. I believe this is the fastest stock market correction in history. Let's look at what Bitcoin was doing. It's going to be very interesting. So at the same time, so this is when the S&P 500 started falling. Let me just double check the date for you. So 19th of February, and Bitcoin, yeah, 19th of February. So again, Bitcoin about a week before started falling, then the stock market started falling. And then here the correction is 58%, so significantly more than the S&P 500, and I believe that the bottom 13th of March 24th. Again, it bottomed out 1 week before. So it looks like from this that in the biggest stock market crash of all time, Bitcoin started crashing a week before, and then it started recovering a week before. Quite interesting. So now let's look at gold. So gold here, this is the same period. So gold would have also lost you money, but you would have taken the least loss. This is only a 10% loss, as opposed to 35% and yeah, way more on Bitcoin. So 2 for 2 for gold, and 2 for 2 second place for the S&P 500, and 2 for 2 on Bitcoin as being the worst asset in a way to protect you against a market turn down. Here is October 2018. So here is the crash before the COVID crash, which was a 18% correction. The market almost went into a bear market here. Started on October 4th, 2018, finished on exactly Christmas, December 24th. So now let's look at Bitcoin during the same price in 2018. And oh my god, so here you have again a 48% correction. And something that is very interesting is Bitcoin again bottomed out before. This is Christmas Day here. So again, Bitcoin bottomed out before the market started going up. And I mean, it was crypto winter at this time, so Bitcoin was already doing horrible. But it did not protect you in this crash. So now let's look at gold again in the same time. So this is gold in the same time. Again, here you would be 5% up. So 3 for 3 for gold, and 3 for 3 for Bitcoin for being a worst asset in protecting you when there's a market turn down. So now let's look at the last data point that we can look at, and this is this 2015 area. Here the market crashed 2 times, 13%, and you can see it started on 17 August 2015, finished 24 August, and then 30 December to 9th of February. Now let's look at Bitcoin at the same time. So wow, here there's a change. So in the same time, this is 17 August 2015 and 28 August. So Bitcoin was actually up 8%. So wow, first for Bitcoin. And in the second market crash, Bitcoin was down 5%, so less than the S&P 500. And now let's look at gold at the same time. So gold went up the first time 3.2%, and the next time it went up 12%. So basically this was a time when you did quite good in both Bitcoin and in gold, very bad on the S&P 500, but in all the other times gold would have prevented you the best, and S&P 500 second best, and in Bitcoin you would have lost quite a bit of money. So I think what happens is Bitcoin is an asset that correlates the S&P 500 and is a riskier asset. So meaning when there's low interest rates, people are willing to take risks, and they want to have more gains than on the S&P 500, then they would bet on Bitcoin. And this is why Bitcoin would signal also when you have a market bottom, and when Bitcoin is doing good, then that's foreshadowing that the S&P 500 is going to do really good. As for and it's the same on a downturn, because you know when people get scared, then you know first they flood into value stocks and then they go out of Bitcoin. So Bitcoin starts falling before the overall market would be falling. So it's a perfect weather balloon. So you can judge the weather. But as for an asset to have for rainy days, based on historical data, it doesn't work like that. You would have been better off with gold, I'm not a gold bug. Personally, I think the best way is to divide your portfolio up into strategies that work also when the market is in a downturn. And I'm going to share these strategies with you as the channel progresses. This was it for this video. Let me know if you got something new, if this was shocking, and hope you liked the video, and I will see you in the next one.